Okay, welcome to the Swing Trading with Cycles channel. This is where we time the market without predicting the market. We follow trend analysis and we get in early in that new trend. So we're going to look at the Dixie today, the dollar index, the US dollar index. Our last bit, and this is October 17th, Monday night. We're just starting to trade now for what will become the Tuesday candle. Our last video was right before the Friday close. So we've had one full day of price action. That was this candle here, your Monday candle, which was red. And this line here is actually your 10-day moving average. This is your daily chart. And so you can see we closed firmly below that 10-day moving average. That's generally an important signal. So in that last video, I talked about the idea that this could be a daily cycle low. This would be day 15. We'll just pencil that in here. And I'll talk about why that may not even really matter. I think the big update here is that we're starting to finally see some bearishness. It's very early in the week. Obviously, we have literally just one day of trading so far, but we could be setting up for the weekly cycle decline starting here. But to be fair, we thought this was the weekly cycle decline as well. And who knows, maybe there's a world where it was a very mild ICL. That remains to be seen. So this could have been a daily cycle low on day 15. And then this would have been a new day of your daily cycle, your first day of your new daily cycle. So day 1, 2, 3, 4, 5, 6, 7. That's why this is marked here like this. And notice from the previous video, I talked about how this is the range we're going to need to get out of. Notice we closed just barely below it. So not that far below it. And so this sets up the prospect for a false breakdown where we spring back into this range. Obviously, the alternative is we can continue to see follow through to the downside and we continue to move lower. And my expectation would be we would at least retest this 110 area, if not make a new low and probably find ourselves down around the 108 area. So very important to watch this. So that would put us potentially, we're about to open Tuesday on day 8, 9, day 10. And we potentially have a high on day 7. So that would set up a left translated daily cycle. It also could be the case that this is not your daily cycle low and this is the continuation of a daily cycle. It doesn't really matter. The point is that this is a lower high than this, right? We had a decline and then we had a little rally and then we made a lower high, which means instead of making a higher high above here, we stopped short of that and now we've got a swing high. Just to be clear, swing high is active below 112.147. Just to be clear, that's the low from this big candle here, which marks approximate high, a local high. And again, that's a high that's lower than this one. So not necessarily a great sign. And as you've been watching on these videos, we are looking for signs the dollar is starting to top into a weekly cycle low because that's a potential trade. So if we look at the weekly chart, I talked about this in the last video. We had this decline. At one point, this was a very red candle. And we obviously closed green with a green bullish hammer. That's why you don't want to put too much stock into a decline on Monday. First thing you want to look for is Tuesday, do we get follow through, consolidation, or a reversal? If we get follow through, which to be clear, meaning more downside, that's something to pay attention to. And the question is, are we going to cut through the 10-week moving average? We did not do that in this decline. We got very close and then sprung back up. But if we are getting a weekly cycle decline, you expect we are going to make a move below that 10-period moving average. And structurally speaking, you'd have to imagine we're going to make a move below this candle here, right? Because like you think about it, this candle is like a big rally, and these are just kind of consolidation candles. Again, this is your weekly chart. This obviously threatened to break down, but it did not get out of the range, notice, right? So that's going to be important to watch, that 109.388 level. The other thing I'll call out, again, look how stretched we are above the 200-week moving average. At some point, the chickens are going to come home to roost. We are going to get a decline. Now, we probably don't get that decline for a little while, which is going to basically give the 200-week moving average time to catch up to price because it's continuing to rise. That's another potential tell that, the 3-year cycle high may be quite a ways away. Some people are saying, late 2023. I mean, that remains to be seen. We're going to watch it. I tend to not try to predict levels per se. And finally, the monthly chart, probably the most significant. We talk about this all the time. It's important to know what the opening price was for a candle, because once we go below that opening price, the candle's red, right? It means we're literally moving lower. And so if you'll notice my last video, as always, links in the description, take a look. The last video about the dollar, this was a green monthly candle. It was a really nice looking monthly candle too. It was, it looked like, it was trying to form a hammer-like thing. Now it's a red doji, pretty ugly, but also still an inside candle, super important. The same way we talked about on those lower time frames, how we haven't broken down this range and this range. That's the same kind of idea here, except this is even more significant. And this is a massive range. The high is 114.778. The low is 107.702. So like a ginormous range, about $7 for, a currency, let alone the world reserve currency. So again, it is month 21. We're consolidating. We have a high on month 20. It's generally around the 36-month cycle. You can see the previous cycle topped out on month 25, but you had one that topped out on month 8. Now this was a very, very short one. You can quibble and say this is actually one big long cycle. It's actually 44 months. And so this was your top here. Would it be like month 27, something like that? This was also month 27. This was a really bearish one where we topped out on month 12, made this huge decline, then came back, made a lower high, and that made another lower low. So all that to say, it's very unlikely that month 20 here is the top, and probably more likely that we're going to get the top after month 25. And if you think about when that is, that would be... so month 25 would be February, right? If we went to like month 27, that would take us to April. We're not here to predict, as I said in the beginning. We're going to watch, because the clue we're going to need is a monthly swing high. That's why these levels have been drawn, right? If we're going to get some serious bearishness, we're going to have to make a low below the previous month's low. And so in this case, we'd have to break down below 107.702. Now, we probably just continue to consolidate the rest of this month and don't make a new low, don't make a new high, just remain inside. And then the low from this month becomes our kind of line in the sand to the downside, and also the high. So the levels will be really clear to watch, and they are really clear right now. We do have some bearishness setting up, but it's really early in the week. Too early, I would say, to necessarily expect, much more sort of downside follow through. And so we'll also look at TLT because of just a general correlation. And this thing just continues to decline. This is your weekly chart. So 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. That puts us in, call it month 18 of this longer week, on this weekly cycle. The last weekly cycle bottomed out on week 31. So we could have, and the one before that on week 30, the one before that on week 41. So we could have a really long time to decline. And I think this is another example where this whole move, again, this is a weekly chart, but if you look at this on the daily chart, this basically looks like one daily cycle. And, the thought is, well, the first daily cycle of a ICL, of a weekly cycle can't fail. I say that's not true. It absolutely can fail if it's bearish enough, right? And on the monthly chart, it's month 19. That's the thing that makes you think maybe we're going to get a bounce soon, because notice how these longer term cycles don't usually go past the 20th month, and we're already on month 19. Not to mention, this kind of waterfall decline. Now, this is a little higher low, a little lower high. At some point, we're going to get some consolidation, a little bounce to make another lower high. If we're going to continue lower, down to that like 87 area is my suspicion. It just kind of looks like this is being dragged down there, like this is a magnet. But it's not going to happen in a straight line. That's just not realistic. And we'll just take a peek at LQD, because I've been mentioning this. We're below the COVID low. So this is your big COVID low. These are corporate bonds. Investment grade corporate bonds. So, the best quality corporate bonds, or some of the best quality corporate bonds you can find. And notice we actually, this is important. Look at that. This upper wick, as I always say, an upper wick is a pullback on a lower time frame. So we came up here and tried to test that level, this low. So that's, to be clear, 104.95. So call it 105. We tested that and then came down back and failed. Not a good look. But also, these are the kinds of ETFs you want to watch to get a sense that the Fed is going to intervene, because it's when these start to break down that you have real trouble. So HYG, which is high yield debt, so a little bit less quality, companies that have maybe a little bit harder time getting financing, and obviously we're going into an environment with less liquidity just in general. We're still above the COVID low, which was 67.50 basically. We're up here at 72.50. And that's a big move for an index like this. I know that doesn't sound like a lot percentage terms, but this thing doesn't move a whole lot. And I mean, as you can see, it's kind of just been consolidating for the last many years, like up, down, up, down. This downswing looks to be pretty extreme. And again, I mean, are we going to test 67.50? Seems like it's pretty likely at this point, but who knows? Maybe that's when the Fed kind of cries uncle and saves everyone. We'll have to see. It will show up in the price action. It is notable that we're still green on the month. That's not true for the S&P and many other indices. And we just looked at, investment grade bonds, and they certainly weren't green for the month. So that's definitely interesting that HYG is holding up better than, let's say, investment grade. And it'll definitely be something to watch, right? Like, we come down and make a new low below that. I definitely want to know about that. I'm just setting a quick alert here. So that's the lay of the land for the Dixie, and then we looked at a couple of bond indices. We'll look at TNX, which is your 10-year yield. Again, just kind of still making new highs. At some point, this thing is going to have to pull back. This is month 11, so week 11, 11 green weeks in a row. Pretty incredible. At some point, this is going to take a rest, and that will give you a signal that other things are ready to run as well, potentially. Like, this will probably give a breather to the QQQs, for instance. So that's the lay of the land for the Dixie. Definitely looking like we may be pulling back here into a weekly cycle low, which, if the expectations hold, would probably end in a higher low, which continues the uptrend on our way to 120. We'll see if that plays out.